Live trading room. Hope you're all doing well. Hope you had a nice weekend. If you're here in the tier 1 chat, let us know. If you're on one of the other channels watching this, let us know. Hopefully you're all ready and set to go. If you've got any setups on the radar, let me know what you're looking at. It's always good to see what you guys are looking at and what's on your radar. It doesn't matter what type of trader you are, it's always interesting to see different traders' approaches to the markets. We've got a few things that we're going to be looking at this morning. Obviously, we're going to be going through the same pairs. If this is the first time you've been to this live room, first of all, I have to let you know that we've made some enhancements to this platform. So some of you will see that now the chat is auto loads. You can also reply to people's chat as well, and you can also, there's a few other things. So there's the auto scroll functionality. The online users list has been changed, it's been upgraded. You can reply to specific posts, and it's got a fully responsive mobile, tablet and desktop version, which is really, really cool. And then there's also a minimize function on the user list so that you can minimize that user list there to expand the main view. So pretty cool. So if you're watching anything or got anything on the radar, let me know. If you're we're going to get stuck straight into the charts. Before we do that, I just want to make sure that we've got an eye on any kind of large or big impact fundamental news releases on the radar this morning. It's Tuesday, January the 11th. Not too much. We've got some FOMC news out later on, but there's nothing that's going to stop me or affect me trading this morning. So let's get stuck in. As I say, if you guys have got anything on your radar, let me know. If you've got anything you want us to look at, or anything that you are in, or anything, maybe you're just practicing, maybe you're just kind of going through the markets, maybe you're new to trading and you're just eyeballing things and you just want an opinion, please let us know in the chat as well. So let's bring on the chat here. Who we got? Good morning, morning. Morning, Jason and good people. Morning. All right, so I'll leave it on this view for now, just so you guys can chat away there and get involved. We're going to go through 8 currency pairs this morning. You'll see that over on the pound dollar, there was an ascending channel, or turned into a double top. There was a retest at that structure level that we were looking at last week. Some of you, as we drew on, said we'd be looking at, you'd be a bit more aggressive getting in here. We was looking for the higher level, which was actually tested. We've retested that again right at the top of that level. So tight stops above the highs. Targets, not greedy, but it's really nice reward to risk profile there. If we just bring on the short position and stick it on there. Let's just draw this out very roughly just to show you kind of the reward to risk profile. It's just over a 2-to-1. So if you got involved with that, hopefully it goes in your favor. What else was there? Pound Aussie last week, we were looking at a hold of this level. We actually blasted through that, so there was no trade there. And the dollar yen started to push down. So this was the prediction. Where's price likely to go? How's it likely to get there? We've actually pushed down a little lower here, but this is still typical of one of those compression channels, just like you see on the cryptocurrencies in particular. We get the dip and then we get the rally. So we'll keep an eye on that. New Zealand dollar was the other one where we was looking for a push down into this zone here, starting around 67.14, and we haven't seen that tested yet. We've just been hovering around, following on from Thursday's session. So that's it. Let's go out to the Aussie CAD. We can see we've got this flag pattern forming here, bearish flag pattern. So let's go out to the daily. Anyone looking at anything on the Aussie CAD? Anyone? No? Please have a look at Euro Pound 1 hour. Yeah, look, if you're looking at any setups, I'm happy to look at those markets. Just tell us what you're looking at. Okay, so like 4 pieces of information would be great. If you're looking at a market, please tell us the pair, so what market it is, what the time frame is, what the setup is, and where the kind of starting point of the setup is. So where the where the X point is, or the impulse point is, just so we can quickly go and take a look at that, without going back and forward in the chat, because I appreciate there's a delay on the chat, so we want to make sure that we can quickly get straight to the trade. So let me know what you're looking at on the Euro Pound, and we'll go from there. All right, we're going to start with the Aussie CAD, and we're going to start on the daily time frame. So yes, we've been bearish overall. Okay, I stopped looking at bearish opportunities because my trading time frame, we saw a bit of a rotation, so I stopped looking for directional trend trades. And in the meantime, I started looking for consolidation setups, and that's what we were looking at. Now, we have seen a rollover. Last week we had a bearish week on this pair, and what we're seeing now is on the trading time frame, if we just bring on our line tool here, you can see that after putting in the higher highs, okay, we failed to put in highs here. We consolidated, and then we violated this low, okay, giving us a new low. Then we put in a lower high, and then we put in a new low, okay. And what we've done since then is we're seeing this flag pattern, which is typically a bearish flag pattern. So if you trade flag patterns, this could be something that you're looking at, a break to the downside. Now, the way that you conventionally take these is, let's just drop down to the lower time frame to make this a bit clearer. Whoops, let's get rid of that tool. Oh, I wish TradingView would remove that last. It's a bit like when you're telling the kids off and they have to have the last say. That tool, and every time you touch the screen, it's like it always puts one last indicator on there. I wish they'd remove that. But anyway, the way that you trade this is you're either shorting at the high of the channel, or you're putting a sell stop on the break to the downside. So you put a sell stop order down and you wait for it to be triggered, and then you're either trading an extension of the flagpole or some kind of equal measured move based on where your stop is to your targets. So that's the conventional way of trading it. Obviously, many of you got multiple ways of trading it. Just patterns on Aussie CAD for me. Cool. I took the bullish divergence V-shaped recovery. Excellent. Cool. Yeah, let us know what setups you got. It doesn't have to just be on the Forex market either. You could be on indices, whatever it might be. You might be, whatever market you're looking at, just let us know, and we'll take a look at the end. So this is a bearish flag pattern. We're right at the bottom of the channel right now. So if you do trade the top of the channel before you look for the short, then you've got to wait for another push up to the top of the channel. But a bit of patience is required there. If you trade the breakout, you could just set and forget your sell stop orders right now, and you're waiting for the break to the downside. As soon as the market pushes down and triggers wherever your sell stop order is, your broker will put you into a short position, and then you have to get your stops and targets in to suit whatever your trade plan is. So that's the Aussie CAD. I'm not actually looking at anything on this personally, because I don't trade these breakouts on the Aussie CAD. I trade these on the Aussie dollar, New Zealand dollar, dollar yen, and euro dollar. I don't trade them on the Aussie CAD, and that's purely because I haven't finished all the testing that I'd like to test. So let's go to the Aussie dollar and go back out to the daily and do exactly the same thing. Remember, we're using this IPDE. So we're essentially using a 4-step process: IPDE, identify, predict, decide, execute. And the way, for those of you who are not familiar with how that works, is the identify phase, we use a higher time frame, okay? And what we're looking at is using that higher time frame to form a bias to put us on one side of the market, look at what state the market's in, what phase it's in, and make a prediction on where price is likely to go next and how it's likely to get there. So then we can go down onto our trading time frame and we can start for the decide part, which is looking at our setups. Setups were allowed to trade in a bearish trend, a bullish trend, at structure, consolidation. And then once we've got our setups, we then looking for the execution. And that's, in my particular trading style, I can use lower time frames for some of those executions and also some of the trade management of those as well and stop positionings. Or you just use the trading time frame for those executions, you know, when the setup's met. So it's waiting for the rules of engagement to be met into that trading setup of your decide, and then you execute. So it's identify, predict, decide, execute. Having a 4-step process like that really allows you to maintain consistency in what is a very subjective market. So it allows you to be objective in a subjective market, which is the key really, because consistency is everything. If you want to be a consistently profitable trader, you have to be consistent. Jason, the border animation is distracting. Just a note for next stream. Okay, cool. If it's distracting, we can change it. In fact, I think we had a bit more of a more pleasing to the eye one. Let me just see if we can. Let's just see if we can change the border distraction there. A couple of people have said that as well, so let's try this one. Whoa, look, you can see all the view loop. Let's close that. View loop. There we go. It's a little less distracting. It's a little less distracting, but it's still aesthetics. All right, so we'll leave the chat up. Let's get onto the Aussie dollar then. So we're putting in a similar situation here. Let's go to this much bigger. This is the daily. We've actually got a bearish flag. We went through this last week. If you haven't seen last week's session, I did stream out the Tuesday session last week as well. Or was it the Wednesday session? I can't remember, but we got the bearish flag. We've put in a new low here, so yes, we are making our way down. The only thing that I said you want to be mindful of on the Aussie dollar was previous structure support. We had a major structure support level looking left, which we bounced off of. So do you really want to keep shorting that? Chances are, you know, we're going to see a hold here for a while, which we've seen a clear bounce off of that. If we break and close below that, great. That should become resistance. You can see resistance becomes support, support, support. If we break below that, it should become resistance, and that would give me a much more comfortable shorting opportunity. But for now, we are in consolidation, so moving sideways. Also, we said to you guys last week that if you wanted to practice looking at structure and bringing on horizontal lines, it can really help you see how that structure is respected and what levels are respected more often than not. Sometimes, you know, a great exercise to do is just to bring on your horizontal line tool and just fire these levels off and then count how many levels a certain price point is tested and respected. And then make a note of those levels, because those can be major pivot levels which are respected time and time again in the future. So if you've got a rule, I'll give you an example of how that can be implemented into your trading to give you more of a discretion there. One, you could say every time that level's tested, I'll trade off of that structure level. That's an obvious one, right? And I'll look for a double top or whatever it might be, or a, you know, whatever your entry might be. The other way you might say is if you're normally a double top trader, but we test that level, you might have a rule that says, right, when we test that level, because it's scored high, because it's got this number of respected tests, then I can be a bit more aggressive and not use a double top. Instead, I can use a 3-bar reversal or a doji even, right? Or, you know, a high test candle wick. So you might switch your aggression. Okay. The other way you might use it is you might not get involved in certain trades. Like if you're looking at a trending trade and we're just about to hit, we've got to break through that major level that you've got on your notes there. Then you might just go, do you know what? I'm not going to take it because there's a high probability with it's a low probability trade. We're likely to roll off of that instead of blast through it. Make sense? So a couple of ideas there as to how you can use those, like just by doing that exercise, literally just by doing that exercise, you can get a lot of discretion written down on some notes, you know, put your sticky notes up or whatever you do with your trading to identify these certain zones. If you're in TradingView or some of your other platforms, you can actually put alerts, right? So you can go, look, if we approach this level only once or every time, you can put a little message in here and say this is a major level. You know, if you're looking for double tops, you can now take 3-bar reversals, or do not trend trade beyond this point because we're likely to bounce. All those kind of notes, you know, you make it bespoke to you and you create this. And look, you can webhook URL this to some software that you've built out. You can SMS it, you can email it. And it's very, very powerful. Really, really good thing to be able to do. So, yeah, so if you, I recommend that you do that. Morning all. Jason, can you make a brief video on risk management in the coming days? This would also be helpful. Sure. I don't know if it'll be in the coming days, but definitely in the next couple of weeks. Do you still trade break and retest? Yeah, on the dollar yen. Morning all. Yen pairs have caught my eye this morning. What are you looking at, Aaron? Also, Jason, there's a what does it say? 0.5, a 50% fib retracement, which I'm looking for a bear flag, gives more confluence for me. Excellent. So yeah, you're looking at a 50% retracement from, I take it, this most recent swing high to swing low. You've got a 50% retracement there. So you'd probably be looking to trade the top of the channel, which would obviously be perfect for this setup. And you're looking at a short. Be interested to see where you got targets. If you're eyeing up targets, the conventional flag breakout targets are an extension of the flagpole. Okay, now that has to blast through 2 major support levels, so I would feel a little bit uncomfortable shooting for targets down here. At most, if I was to trade this breakout, I would be looking at just a retest of these lows before I took my entire position off. So that's personally how I would approach it. But anyway, look, we're still on the daily time frame, so I don't even trade flag patterns on the daily. But what we can do is see if our prediction is bearish. Okay, so let's just say that you've made a prediction that, okay, well, we're bearish. How can you get involved in a bearish trading opportunity? Well, there could be something else that you could get involved with. You might be looking at this lower level flag pattern. If you consider this a flag pattern, let's go down to the 60. It might look a little bit ugly, but you might be looking at this and you might say, right, okay, this is the flag pattern. So instead of this big setup, I'm going to look at trading this breakout or wait for a retest of this high and then short, and then I can get tighter stops potentially and then jump on the move and maybe trail stops on a lower time frame. For me, all I'm looking at on this at the moment is consolidation setups. If you're familiar with ratio patterns and things like that, if you bring on our Fibonacci retracement tool and go from this low to high, you're going to see we have a deep Gartley setup. So anyone familiar with Gartley patterns? Okay, this is what it will look like. Let me just bring on the extension and go from A to B and back up. And you're going to see, I'll draw this on with a triangle tool because I just think it's a little bit cleaner sometimes, especially if we're doing these streams. X, A, B. and CD. Now the reason it's called a deep pattern, or the reason I referenced it as a deep pattern, let's clear all these lines off. These Gartley patterns are very, very popular in stock trading, Forex trading, particularly the Gartley setup. And when we say it's a deep pattern, what we're referencing to is the area of the completion point and what your risk reward will look like on this setup. Okay, because what the rule is for the B leg is we have to hit the 618, but not hit the 786 retracement. So we've done that, but the closer we can get to the 786 retracement without hitting it means that the deeper the completion point's going to be, because that is an extension of A to B. All right. So what that means is if we've got a deep setup, if we bring on our let's just use this long position here. If our entry is here, okay, and you can see our stop loss, for those of you who use the conventional 113 inversion based stop, you can see that if our target, our best case initial target is at the 382, which it would be on a Gartley, then you can already see that it's a 2 to 1 reward to risk. Okay, now if this D completion completed higher because the B leg was higher, right, then it's not going to be as good reward to risk. Make sense? So because the completion point is low, it means that we've got a nice reward to risk profile. It was actually at 1.96 to 1. So that's the completion point right there. And that's a nice setup because one, it's a high probability setup. So it's right, it plays out more often than it doesn't. And second of all, it's a nice reward to risk profile. So we're right more than we're wrong. And when we're right, we win more when we're right and we lose when we're wrong. And if you could just trade that pattern all the time. I know I met a trader in Las Vegas a couple of years ago, worked at a prop firm in Manhattan. All they did was trade butterfly patterns. And they just traded them a certain way, certain risk reward profile, and that's all they traded. And they did very, very well doing that. Jason, we could see the symmetrical pattern on gold on monthly time frame. Looking for bullish next target at 2,500. Cool. We'll take a look at that in a little while. So, anyone else looking at anything on the Aussie dollar? I wonder. No? I got asked about putting money into gold yesterday. Someone asked me if, they should put some money into gold for their kids. And I started getting into this kind of rabbit hole conversation. And what you need to understand about gold is it's not really, it's not an investment. Gold is just it's relative to what else is happening in the world. Okay, so it might go up and down temporarily, but it's really a reference. Okay, gold is a reference point. So if if let's just say, for instance, that the value of gold went up, okay, in 1 year, what that means is more people have put their money into gold because there's less trust in other assets, okay? And usually what that means is the value of money, actual money, will follow that. So it's relative. So the gold, it doesn't necessarily mean that the gold will be worth more because it might be a higher cost of living, which is the reason that people have put money into gold. So it's a safe bet, okay? If you want to put your money and keep it relatively safe over a long period of time, then gold is something that you can own, which will just track what's going on in the rest of the world and the economy. It's not really an investment. An investment is something where you're putting your money into it, and the idea is that the value goes up and up and up and up forever. That's an investment. Gold isn't an investment. Okay, it's just an asset that you can hold to protect your capital. You know, it's that's it really. So you can trade gold, certainly. You know, trading is getting in and out. Trading isn't investing. In fact, when you're a lot of people get confused that they kind of confuse the two. As a trader, your job is to seek out as many opportunities as possible in short periods of time and get in and out in short periods of time. As a trader, you want to be buying and selling. You don't want to be holding and being greedy, because one, you're missing other opportunities, and two, you're not trading, you're investing. You're not buying and selling, you're just holding and holding and holding. So you want to make sure that you understand the difference between those two. You're either an investor or a trader. If investing resonates with you more than, you know, buying and selling, and you don't really want to be that active in the markets, then absolutely, you know, you might just turn your hand to more passive investments, of which there's plenty of, by the way. You know, you can go and just automate your investments. You don't even have to be involved. A lot of the time, what we see with traders is they get into trading and then they realize, actually, I don't want to trade. I don't want to be a trader. And that's very normal because of the fantasy that they've got in their head about trading in the first place. People who do well in trading are the ones that actually love trading, and it's their genuine interest in the markets and tracking the markets and finding systems and developing systems. That's the traders that do well. And it's okay if you figure out that actually I don't really want to trade. That's fine. Just, you know, don't. You don't have to do something that you feel like you should be doing because everyone seems to be doing it. Remember as well, with social media and everything, what you see a lot of is people that if you've shown an interest in something, because of the way that the algorithms work on social media, you're going to see more and more and more of that thing. It doesn't mean that everyone's doing it, because your next door neighbor could be seeing something completely different. And they'll think, well, I don't see anyone that trades. I've never heard of it. But you're seeing lots of it because you've shown interest in it. And what that does is it makes you believe that everyone is trading it. It's like NFTs. NFTs and all that, you know, NFTs seem to be everywhere. And people are getting panicky that they're missing out on NFTs. Oh, I need to master this. I need to realize what this thing is. But you only feel like that because you feel like everyone's getting into it and it's too late. But actual fact, it's a very small minority of people, and you're just seeing all of those people because you've shown interest in it. When in actual fact, most people on social media aren't seeing NFTs. We're just in that world, which means you're being fed lots and lots of NFT information and lots of trading information. It's not the majority, trust me. That's how social media works. Cool. All right. So let's get back to the charts. Jason, can you give examples of assets people can invest in? Sure. So you've got really the categories are passive, okay? Passive investments. And then you've got kind of mid-passive or semi-passive, and then you've got active. Okay, now active. Let me draw this out so everyone gets this. Okay, I'll do a quick tip on this. So as we go up towards from passive to active, okay? Passive investments are things that don't require your time, okay? So the more automated that you can set this thing up as, the more passive it is, the less time of yours it takes. Things like index funds, you know, investing in index funds. As you go up this scale, like you might look at ETFs, which you could get an S&P 500 ETF, but that will require potentially you to then go through a broker and manually do a transaction. Now, lots of that is automated now as well from many brokers, but you can see that there are levels of passivity to investments. Okay, so there is ultra passive, where you don't spend any time, you just set the thing up and set and forget it. And then there's, a little bit less passive, so that you have to actually use your time to do, an hour a month maybe, or something like that. And then as we go up this scale, it's going to be more active. And this is essentially trading. Now, as you're down here, this takes less, let's just say least time, it's least risk, energy, leverage, least returns, okay, because it's going to be the least returns, because someone else, if you're not doing it, if your time isn't going into it, someone else's time is. All right, so you're going to get less returns for doing that, but it takes the least time, least risk, least energy, least leverage, least returns, and least amount of skill. Okay, so down here, it's the least time, and up here, this is trading. Okay, so this is going to be the most time, most risk, most energy, most leverage available, more returns potentially, and it's going to require you to have more of a skill. And that is really it. That's the matrix of investing. Now, I recommend, that you have, me personally, what I do is I put most of my liquid here, then I'll put a small amount here, okay, and as I go up my investment account structure, I'll have less and less capital at risk until, I've got a punt section of my account, and it's structured this way. So if this is my total liquidity, this is really how allocations of capital get paid into my my investment accounts. So most of my money will be in passive investments. A bit less will be in mid-passive or semi-passive investments and stocks and things like that. Large cap, medium cap, small cap stocks. Then I've got my Forex account, and then I've got other investments like literally crypto, startups, real high punts where I allocate a tiny portion of my overall capital to that investment, knowing that if it crumbles, it won't crumble the entire pyramid. So that's it. But examples of investments are kind of index funds, ETFs, real estate investment trusts, up here, large cap stocks, medium cap stocks, smaller cap stocks and IPOs. Then you've got property, Forex, stock trading, where you need actual skills. The more skill you need, the more of a speculation it is, the more active it is, and the more of a trade it is. So a property is not an investment as such if you're looking to flip the things, because you're going to need skill to do that. You're going to need the eye to identify good deals, know what market is going to buy it, when, what time of year, all of that stuff's going to require. Whereas if you're just buying land, that's more passive. You buy the land, you then let people build on it and do whatever, you just own the land. So that's more passive. And you can make pretty much, the idea is that you get good and develop a skill to get higher returns, and then you make that thing passive. So a lot of you guys, this is going back to what I was just saying before, a lot of you guys are now looking at automating your trading because you realize, actually, I don't want to be stuck in front of the charts doing trading all the time. So you develop a real profitable system, and then you try and do it less of it. So you then create an ATM or a bot or something that runs your trading for you, or you just trade higher time frames, which then obviously is more of an investment. So hopefully that makes sense. Let me know if it does. Let me know in the chat if that makes sense to you. That's a nice little lesson there for today's session. And we've got this example trade on here just to show you guys the structure set up on the pound. Looks like this could get stopped out, but it's about a 2 to 1 reward to risk. And if we just go out to the daily here, what we were looking at is this major level, previous level of structure looking left. We approached it, we had a rejection candle, we approached again, had a bit of a doji candle here as well. And if we drop down to the 4 hour, you're gonna see that as we pushed into that, we had this big retest. We pushed up a little higher, okay? And this could be the violation, because what we was hoping is that the market would hold this 35.97 or 3600 level, which would be the major level, and we'd see a hold there. But it looks like we're seeing one last attempt at pushing through. This is a decision point. Are the bulls going to win? Are the bears going to win? Who knows? We'll have to just wait and see. We've got a little while until this candle closes. So we will we'll come back to this in a little bit. If we close above, then we can switch our bias and potentially look for shorts. We can potentially look for shorts on this if we close long opportunities on this if we close above. If we break and close above, we can then start to look for potential buying opportunities on this market. Has anyone got any setups here that they want to share with us on the pound dollar? Anyone? No? Thank you for the investment insights, no worries. Aussie cab bullish bat, X at 1082. Did we look at that? Yeah, I think we did. And there's Aussie dollar, Gartley, pound dollar, short, euro dollar. Let's check out the euro dollar then. I refrain from sterling short cause of ascending channel. Okay. An ascending channel is actually, depending on how the channel forms, is actually a very high probability short. Only a momentary short, not a reversal. But if you can identify ascending channels, they're actually great shorting opportunities. Very, very high probability. If you go onto my trading view and check my ideas that I post on there, you're going to see lots and lots of ascending and descending channels where they've got high strike rates. Very, very high strike rates. If you can build rules around an ascending or descending channel strategy, you're going to have one of those high strike rate systems where you're right much more than you're wrong. So I recommend going and do some testing on ascending and descending channels. One of my favorite setups. Let's see. I can hear the chat going off on tier 1, but I can't see the chat. So I don't know what's happening there. Not sure what's happening there. So if you're on tier 1, possible sell. Great. All right, so look, euro dollar then. Euro dollar last week, we basically said that since November, end of November, we've been moving sideways here in this consolidation channel. And yes, we have been doing that. It's a very, very choppy market. We've been moving sideways for a long, long time on this pair. And when we're doing the IPDE process, what we're doing here is we're saying, okay, well, identify what is it? It's consolidation. Okay, and because of the amount of time we've been in consolidation, the decide part is, well, you know, how can we get involved? What do we have in our toolbox that will allow us to get involved in some opportunities in this consolidation period? Well, some of you trade bats, some of you trade Gartley patterns, some of you just trade off of the structure, support and resistance levels of the channel. Some of you just trade, you know, flags and stuff in between the channel. But for me, it's really just pattern setups or some structure consolidation setups, which have now been invalidated by this break and close above. So for me, it'll just be patterns, ratio patterns. We can look at X to A legs, A to Bs and things like that. Let's just go down to the 60 quick. Let's get rid of that. X, A, B. Okay, so this would be a what you call a butterfly, which is what I mentioned earlier. And you'd be looking at, oops, butterfly pattern would be X, A, B, C, D. So a butterfly pattern actually completes beyond the X point. So that's why a lot of traders struggle with developing a system for butterfly patterns, because of the structure. You want your stops above structure, but actually the completion point's above structure. So where does your stop go? And an idea that is quite common is something like an inversion, a fib inversion, like a 127 or a 113 inversion of the X to A point, or A to X point, as I should say. I don't trade butterfly patterns, so there's no other pattern here, ratio pattern, that suits my rules of engagement in my toolbox. So I've really got nothing on here. The only thing I could potentially trade is an FTB, follow the bear signal. So yeah, it's just meh. Yeah, there's not a lot going on the euro. There hasn't been for a while. So a couple of pattern setups and things like that. In fact, we've had a few patterns, but a couple of them have failed. A couple of them have worked out. Nothing really great going on this for a couple of months now. So we'll skip past that one. We'll get onto the pound Aussie and go out to the daily. Let me know if you're looking at anything on the pound Aussie, guys. Also, let us know where you're watching this live stream from. Let us know where you're tuning in from in the world. Euro dollar is in consolidation, correct? It's in a range, yep. South Africa, nice. I will go there one day, if I'm allowed. If I'm allowed there. All right, so we're going to go to the we get Switzerland, Greece, New Zealand, Northeast England. Wow, India, Switzerland, all over the world. Amazing. Excellent. All right, so what we're going to do now is we'll go over to some bigger pairs. So the pound Aussie and the pound yen. When I say bigger pairs, what I'm referring to is the average true range of that pair. The bigger the average true range, yes, there's potentially more money to be made, depending on how you manage your money management and your risk management, and how you calculate your position sizes. Some of you used fixed ratios, some of you used fixed positions, some of you used like 1%, 2% risk on your account with every trade. So depending on your style of money management there, and risk management is going to depend, you know, whether you care about average true range and things like that. But the way that I trade this particular portfolio, we use fixed ratio, so a smooth ratio, sorry. So this is going to be, because our fixed position size is only increased and decreased when we hit a delta, when we're doing well and we're on a winning streak and we pass a certain threshold of equity, new equity highs or profit, we can then increase our position size. Or when we're in a drawdown and a losing streak, we reduce our position size until we go back over that watermark to protect our capital. And it's a real effective way of of boosting your capital and not being overexposed in terms of risk across your entire account when you're in multiple trades. Because if you're just risking 1% or 2% on any one trade, that's not the worst thing that you can do. But just understand that if you're in 10 trades at once, then you're potentially risking 10% of your account. If you don't have a rule to, reduce that down or, or not be allowed to take more trades, or maybe you've got a correlation risk. There's many things you can do to eradicate that. And I'm giving you a real kind of raw example, but if you was just risking 1% of your account every time and you just entered 10 trades on one day, then potentially you're risking 10% of your account. So I would say at least what you want to be doing in that scenario is having a rule for not being in over a certain amount of risk at any one time. So that's worth bearing in mind. So pound Aussie then has a big ATR, and that means Newcastle in the house. Great. Just completed a sell Gartley here. So look, in terms of patterns, we did have a bat pattern for some of you, but for most of you, the B leg didn't hit the 50% retracement. See that? Just shy of the 50% retracement, and the completion point would have been a bit lower anyway. But it wouldn't be a Gartley in my conventional rules of a Gartley pattern. What we are seeing here is this ascending channel. All right, now look at this. This is of interest because we're at previous structure resistance. Okay, here's the previous structure resistance, this wick here. Here's the close, here's the highest close. Sorry, here's the open to the highest high. And then we're ascending. We've seen this big bullish momentum as we've approached that level. 1, 2 big, strong bullish momentum candles, followed by what we call deceleration or loss of momentum, right? It's running out of steam. The RSI goes overbought, and we start forming this ascending channel. This is why I say ascending channels at the right area are really good, effective setups. The problem with this is, as we go down to the trading time frame, we've actually closed above the previous high, which invalidates the setup for me. Okay, so we've closed above the previous high, which means I can't enter a double top or anything like that because we've closed above structure, which then means we're likely to push up. So there's small kind of nuances and little discretionary clues that will allow you to enhance your trading system to put you on a higher probability side of the market at all times. No matter what style of trading you've got, there's always filters and little clues that you can use to enhance your system and become more aggressive or less aggressive, more conservative. And that's essentially what you want to continuously be working on. You want to be, the ultimate, would be to be right more than you're wrong, have good reward to risk profile, and be ultra aggressive. That's the goal. But, if you want lots of opportunity, you're going to have something, in between. You're going to have something that makes you more conservative and you get more opportunity, but you get less reward to risk, but you're more conservative. And then you want the more aggressive, high probability, high reward to risk. And you've got to make that suit you. Those little clues are what get you from break even to profitable. Yeah, that's it. Look, when you're a trader, you are exploiting a tiny, tiny little edge that requires constant work and refinement. That's it. Funny question. Have you considered beefing or engaging in online drama as a marketing strategy? You mean like no publicity is bad publicity kind of thing? Like, you mean polarizing messaging? Is that what you mean? Like calling someone out and things like that? I think that's what you mean. If that is what you mean, the answer's no, not really. I'm very much of the approach of just there's no competition, be the best you can be, focus on providing lots and lots of value, and that's all I've done throughout the entire time on YouTube that I've been here. Message has been the same from day one. I think that if there's anyone to have beef with, they're going to put themselves out anyway. They're going to put themselves out of business anyway, because you'll compare what they were saying years ago to what they're saying now. You'll see the message change. You'll just see the underlying agenda of those people is just slime. So there's no real need for me to beef them out. In terms of polarizing, I am polarizing. You know, I do say a message and I stick to the message. I don't try and please everyone. So I'm telling you things about trading and things about mindset and psychology and investing and money. And that is how it is. If you don't agree with it, I don't try and then please you. And that's how you're able to develop a real strong audience, because you connect with people who really resonate with what you're saying. If you try and keep everyone happy and be a bit fluffy, you're going to get lost in the noise. You won't stand out. So I like to think we do a good job of polarization by, you know, being true to a message essentially. But in terms of beefing and calling people out, that's not really my style at all. There are people that do it. Like, there's people I know, Forex, very well-known Forex educators that log into their girlfriend's Instagram account to comment on my posts, which is hilarious. Hit like button. Amazing. Yeah, definitely hit the like button. Hit the like button. Good stuff. So look, we've broken close above the high. Not looking to buy this up just yet. It'd be nice to have extra confirmation. Remember, I'm a bit more conservative on this pair. With these pairs, pound Aussie, pound yen, I like to have a shallow window of entry, which means that I get a high probability setup, a good reward to risk profile, tight stops. So in order to do that, I only get a shallow window of entry. Jason, do you see the stats from prop firm success rates? Yeah, I've spent some time on a few prop firms, couple in London, a couple in Manhattan actually, and yeah, I know the owners very well, and I've spent some time there. I've had conversations with teams. I've seen the figures. I've seen the leaderboards, I've actually seen many of the traders. There's one prop firm in particular, I won't name names, but there was teams there that had been there for about 3 years and never made a profit. They'd never made a profit, but they were developing systems that were then going to be used, live. And the prop firm owner had a lot of belief in these guys who were running the teams. And actually, last year was their first profitable year after 3 years of being at the prop firm. From 2020 and 2021, I know for a lot of prop firms, it was the best trading year in terms of results and returns. You are doing best like that, Jason. Good vibes. Thanks. Yeah, I just do what I do, and if you like it, great. If you don't, or you're not interested, you don't want to listen, you can always go and find some pip daddy on the TradingView forum or some crypto forum or something. Yeah. I know Mike Bellafiore. Does anyone know Mike Bellafiore from S&B Capital? They did close on to $70 million last over the last 18 months. That's pretty good. 70 million in revenue, in profits. Sick of Greg Secker. As I say, I don't really coat people off, but it's funny how everyone I know seems to have the same opinion of certain people. I don't know how they get any. Yeah, I really don't know how they get any business, to be honest. But if it's so blindly, like if it's so glaringly obvious to see, you wonder how people fall for it, right? Because I don't know one person that hasn't said that same thing. One good trade. Yeah. Suppose that's decent. Yeah, I'd take that. I'd take that. All right, look, so pound Aussie, not really a lot there. Pound yen, we were looking at this. I left the indicators on this chart from last week just so I could show you guys how this is kind of playing out. We approached this structure resistance zone that we drew out based on the daily. If I go out to the daily, we drew this zone out on the daily time frame. Where we were looking at this basically this test here, and we drew the zone out, and what we was looking at on the trading time frame, or the first trading time frame of mine, which was the 4 hour, was if we could get a retest. We didn't get the retest because we closed above this high. And then what I said, what we could do is get an ascending channel, and that could be our next chance. What we eventually ended up doing was rolling over. So we've actually broken close below this low. One thing you could potentially trade here is just like a kiss of death or a retest up in this zone. But going by what I just said, I like a shallow window for entry, high probability setups, tight stops, you know, good reward to risk profile. It's not really looking attractive to me because one, I don't have anywhere to get stops that are decent because this isn't a retest. This is, yes, we got that nice divergence, but we closed above the high. This is what we was looking at, right? We looked at the overbought condition of RSI. We wanted divergence on the RSI, which we got. Only just. We're still overbought at this point. But we didn't get the valid retest, because the valid retest would have been a test of the highest high to the highest close, which we tested, but we closed above, which we're not allowed to do. And we did. So that invalidated the double top. That eradicates that, you know, that's that opportunity gone. So then we're looking for the next opportunity, which would have been an ascending channel, which wouldn't have been for me because I don't trade ascending channels on this. But this is, you know, this is an example of how that just failed, rolled over. And these are the little clues that you can pick up on to enhance your trading system, to put you on the higher probability side of the market at all times. So, how many trades do you take on average per week? On average, 3. About 3. And that's my trading style. So as I said at the beginning of this session, I'm looking to trade. I'm not looking to be trading actively all day long. I want to do less and less trading. Now I've got systems that are profitable. My job now is to make them more passive. And if I can make them more passive, I get better returns and less involvement, which is, like, I don't know about you guys, but that's the goal for me. I want to focus on other things as well. So I use this as a wealth vehicle, as a wealth acceleration vehicle, and it's what still today by far the best one, because one, I've developed a skill that allows me to generate consistent results without giving money back over a long period of time. So it's an accelerative and growing. It's a growth income rather than a volatile, you know, lucky win and then back to break even, lucky win, back to break even. So in terms of that, it's the best wealth acceleration vehicle that I've got in my overall portfolio investment strategies. But I still want to do less of everything. I want to do less of everything. So the goal is to make it more passive. I don't want to sit trading all day, every day. That's not that's not my end game. You know, that's really not my end game. I trade as it is. I spend about, an hour every day looking at the markets. I spend about 15 minutes every day doing my swing trading, checking the setups there. Probably a bit less than that, actually. And then I do these live rooms where I'm looking through this portfolio here. That's by the way, I'm using TradingView for this, but actually my Ninja Trader account is this same portfolio. So that's just to my right here. But yeah, it doesn't take very long at all. And I want it to take less. I want it to take less time. Being a profitable FX trader is the closest thing to superpower and rockstar. The reason it's so hard to be consistently profitable, and when I say consistently profitable, what I'm talking about is over a 10-year period, have you continued to generate profits? Have you got more than you started with over 10 years? Because a lot of people can have lucky wins and winning streaks, but there's no real skill involved. But if you're able to generate consistent profits over 10 years, then you've really nailed that skill, and you're refining your edge, and you're optimizing your edge, and you're continuously on top of it. You're consistent. That's great, right? The reason it's so hard is because, one, it's just you. There's no one else you can blame. And this is why when people say, oh, that system doesn't work, or, oh, that trading system doesn't work. If you're saying that trading system doesn't work, you've missed the point of what trading is. Because let me tell you this, trading is about being a system developer. So if you've ever said something like, well, that system's rubbish because that educator doesn't know what, that they're teaching a system that doesn't work, you've missed the point. One, the educator's teaching you something that's, that they're saying you just trade this strategy and that's it, sail off into the sunset, which is wrong. So one, that educator's poor. Two, you're missing the point of what trading is all about, and that is making a system to suit your personality, your risk-reward profile, what suits you and your personality, what suits your lifestyle, so time frames, markets, things like that, and how to develop a system that you can consistently trade. And then the work that goes into constantly refining that and optimizing that edge, and reviewing and journaling and tweaking. That is what trading is. So because it's all on you, there's no reason why you can't earn money in trading. The only reason you won't earn money consistently is if you give up, or you keep jumping and jumping and jumping and searching for some system that someone's trying to sell you, that is going to be that golden goose, which doesn't exist. Or the other reason it's hard is because it's lonely. You're on your own. It's all on you, and it goes against every fiber of your being. In terms of when you're feeling greedy, you want to be fearful, and when you're feeling fearful, you want to be a bit more greedy, and it forces you to do the exact opposite of what you've been evolved as a human to want to do. So it's ridiculously hard. So the way you get around that is by having a community, having a decent community, not a forum, not a forum where everyone is literally doing what I just said and telling you, oh, that's rubbish, that's not the right way to trade, this is the right way to trade. You want to get away from all of that. You want to get around a decent community like this, who are all in that same mindset. They're all developing their systems, they've all got their own, they know what trading, the fundamentals of trading is about. They're learning to fish. And once you're around people like that, all that's shared is quality ideas and encouragement and help, and people put their hands out, and that is what tier 1 is. Any plans for incorporating a bot into tier 1 for mechanical strategies to take away the time? Yeah, we're working on different automations. Again, it's really the way that we teach is you need to build the strategy to suit you. So it's no good us giving you an automation, because the problem with giving someone an automation is, one, they don't know they don't know the ins and outs of the system. So if I just said, look, this is going to tell you when to buy and sell. You just click buy and sell when you want to click buy and sell, and when it tells you, and that's it. If you don't know what's behind that, if you don't know what's gone into that, you might hit a losing streak, right? So you might put, let's just say you put 50 grand into an account and you take one losing trade and you lost £500. And then the next trade says sell, and you hit sell and you use £500. You've lost £500. So now you've lost £1,000. You've got 49,000 left. Then the third setup comes out. It says buy, and you hit buy and it loses, and you lose another £500. So now you're £1,500 down. At that point, do you think you're going to have, because you don't know what's gone on into the background of that strategy and you're just following blind and automation, do you think you're going to have the mental, psychological strength to stay in another trade or get in the next trade? Or do you think you might jeopardize it? I mean, where's the trust coming from? If a platform or an overlay onto a platform and a bit of software is telling you to buy and sell, you are not going to be able to make money consistently over a long period of time, because you don't know why you're buying and why you're selling. So you have to develop the system first, then automate it. You have to do it. So instead of developing bots, the best thing we can do is teach you how to code and teach you how to create automations, because the next step, when you want to become more passive, you create it. You write the rules. This is why it just doesn't, this is why most trading educators and all these approaches, yes, they're selling the quick fix, what people think is the quick fix, which they're making much more money than us. They're making much more money than us on education, because that's what people want to buy. But the results is what we decided to go after and get results for people, because we don't need the money. We deliberately structured the pricing and everything to get the ideal client and then obsess over getting results for them. And if you can do that, they will tell someone, they will tell someone, they will tell someone, instead of the other educators who are getting zero repeat business. I mean, how many, think of an educator out there that you think is a sleazeball. How many repeat customers do you think they've ever got? How many people have gone to them and gone, that was really valuable, I'm going to go and pay again. I'm going to go and recommend this to someone else. No, of course they won't, because they won't get results. You're not going to recommend something that you feel sketchy about in yourself. So what does that do? It means that one educator is churning through clients, and there's only a limited amount of people on the planet, and the other one is organically growing. So over time, there's an exponential effect, a compound effect that takes place, that eventually we just get, we reach a lot more people, and we change the entire landscape. So we're playing the long game. It's just a signal service, yeah. Signal services, I know. By the way, I've worked with many respectful traders who have done, they've built multi-million pound businesses, then they've put into trading, and they've done signal services. And one of them was, he was an absolute genius, the guy. He followed a signal service, and he'd done relatively well for a period of time, for about just under a year. He was doing it very well, and he was able to just keep taking the signals and have the discipline to do that. But then it went south. It turned. Something stopped working. It wasn't performing as well as it did, and he didn't have any data. Here's the other thing. How do you optimize a signal service? Your hands are completely in, your life is in the hands of a pilot. And if that pilot stops, or they're not tracking it or tweaking it or optimizing it, You're not journaling it because you don't even know what's behind the strategy in the first place. How do you then journal, and how do you then optimize and tweak? You can't. You can't. So, look, what I'm saying here is nothing short of common sense. It's really not. And whenever I say things like this, I think, God, obviously everyone knows this, but it's surprising how many people don't. Surprising how many people don't. You look at the quality of the conversations we have on here and the community we've got on here, and then you compare it to elsewhere. It's just, it does make you wonder, who are the people that fall for this stuff? Perfect. I would like to learn how to code my own strategies. Excellent. Well, stay tuned. I could not speak more highly about Tier 1 platform. Massive thank you to you, Jason and Akil. You're welcome, man. Caesar, I will pass the message on to Akil. Thank you very much. And it's great to have you guys as part of this fantastic platform as well. All right, so, whoops, let's, where are we at? Let's go to the daily here on the dollar yen. Remember I said to you guys that this pair doesn't really ebb and flow, like it doesn't behave like other pairs. Well, in this case, we've pushed right down into this structure level, but we've actually pushed, way below it and closed below it. So this isn't the most exciting, attractive opportunity either. It has put in this compression channel with a dip down. If you guys have followed my Bitcoin setups, which I've taken publicly over the last few years, you'll see these, both of my entries were this exact setup. So first one was here. This is the exact setup. We had the dip down, 20% dip down, 50% above the highs to 2900. Yep. To 120 I got out. And then back in February last year, exactly the same setup. Probably see this better on the 4 hour. Sorry, I'm scrolling in and out here. There we go. Exactly the same setup on the 4 hour. Ignore the lines. The lines are all over the place because they haven't been drawn on properly, but this was the exact same setup here where we took the dip. Now, if we go back to the dollar yen, ugh. God. If we go back to the dollar yen, you're going to see that same kind of setup there. So what typically happens is we break to the upside. There's about a 72% chance of retesting this high. And I know this because I've tested extensively on this pattern on this pair. 72% chance of hitting this high, but there's a 50-50 chance of pushing up or pushing down first. In fact, on this pair, it's about 52% chance of pushing up. We've actually pushed down. Okay, so regardless of pushing up or down, there's still a 72% chance of testing the highs. What it means is you've got to have a way of attacking this depending on what it does first. Now, you either set a buy stop order to trade the break to the upside, or you wait for this rollover, and if it does that, you've got to then have some breathing room and a consistent stop loss position. So what do? Do you wait for it to break down and then a higher close like we've got here and then enter? At which point you're at market, right? You just go, right, okay, we've pushed down. I've now got the higher close candle. I can now trade this, and you might just go, do you know what? That's it. At market, whatever your position size is, and you hit buy. And then where does your stop go? Well, it might be an ATR below the low. Okay, so you might go, okay, well, the ATR's 17. I'm going to go 17 pips below this low, and you might put your stop loss down 114.90. Something like that, right? So you're going to have ways of doing that, and then you take your target at the high. Some of you might take the extension or trail stops or split your position, but you've got to bear all this in mind when you're taking these trade setups. You've got to have consistent ways of getting involved and managing the trade. 116, 10. So that still is over a 2 to 1 reward to risk, and that might be it. If we didn't dip down though, because there's a 49% chance we're going to dip down, 51% chance we're going to push straight up, but a 72% chance we're going to hit the highs, then you would have to have another way of entering. You have to go, right, okay, well, I don't want to miss it. I want to capture it. So I better set a buy stop order here in case we trigger through. And if we don't and we roll over, then I need this to happen. And my stops go here, targets go here. So you just got to bear in mind that you've got to have different rules for different situations. And you have to be a little bit more aggressive on the dollar yen because it's it's one of those pairs that just doesn't like to behave like, it doesn't move very harmonically. Let's put it that way. Let's go out to the New Zealand dollar. New Zealand dollar on the daily. Not a lot to say about this pair, so we'll be wrapping up shortly. New Zealand dollar on the daily. We were waiting for a push down to this retest where we was looking for a buying signal. We just moved sideways the latter part of last week, which means we just moved sideways. Like we just literally moved sideways. The only thing that we're looking at, look, we had doji, 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 sideways, doji, sideways, sideways, doji. It was just, doji means indecision, and it's basically just the market. There's some anticipation here. We're just moving sideways. It would have been nice to have seen a test of this low look for a potential structure-based long. We didn't get that. We've just continued sideways. So other than any like consolidation patterns and things like that you might trade, which I don't think we've hit. No, we haven't hit a 50% retracement, so there's no back pattern or anything there. Nothing on a lower time frame. I've got no notes on this pair whatsoever. So not a lot on this one, nothing to talk about. I'll still be looking for a test of this low. So if we can push down to this low, I'll still be looking at taking a stab down here, taking a shot at buying this up for a quick in out. If we can get a nice tight stop, good reward to risk profile. Obviously we're putting in some structure now, so I won't be taking profit targets beyond this level here, because I don't get greedy with structure-based setups. I just want to get in and out. Remember, I'm a trader. I want to get as many opportunities as possible. And this is kind of, look, best case scenario, probably 30 pips if I can get tight stops below a double bottom. So that's really something we can look at later on in the week. I'll be continuing to stream these setups into the Tier 1 platform tomorrow and Thursday, so we can follow these along. If you guys have got anything that you want to let us know that you're trading, let us know in the chat and we'll take a look at that. But if not, we'll be back again tomorrow to do exactly the same thing again. I'll update you on how these trades go that we've taken here on the pound dollar and the dollar yen. And that's it. If you're interested in joining our live trading sessions, we do these every week, Tuesday, Wednesday, Thursday, inside the Tier 1 platform. And you also get phenomenal education, Q&A sessions, accountability sessions, and all the tools and the strategies that we teach inside the platform. So until then, take care, have a great rest of your day, and I'll see you tomorrow.